Hey guys, what's up? Alec back with the daily stock market, and today we're going to be talking about options trading. And I know a lot of you guys love options trading, so you're definitely going to want to watch this full video because I'm going to go over 5 different option calls that I'm considering. And I could be one of those guys that talk about all $500 or $1,000 or $2,000 option calls, but I made sure that all the option calls are around $100, $200, or $400, under $500 for the option calls, so they're affordable for everyone to do. I'll go over my opinions. I'll go over risk tolerance, risk factor, which ones are the most risky, and we'll kind of grade the options to see which one is the best, and we'll kind of work through it together to see which one I would probably take out also. Now, if you don't have Robinhood yet, that's the app I'm currently using. You can see they're giving away 3 free stocks to everyone I invite, so get your free stocks. And if you don't have Webull, they're also giving away 2 free stocks on top of that. So if you get Robinhood and Webull, or if you don't have one of each, or if you don't have either of them, you can get a lot of free money. So DM me on Instagram, and I'll be more than happy to shoot you over my link to get you some free stocks. Now, we're still absolutely destroying it this month, up 30% in the last month. And we'll also do a quick stock market update here, too. So you have ChargePoint up 3%, Tesla up 2%, NIO up 5.6%, and XPEV up 7%. So I wish we ended up doing an option on them, but they're already up 70% in the last month. We've taken some profits on them. We're up 40% total on our position, and we had over $3,000 in XPEV on all my different accounts. Now, you'll also see that Shopify won't quit going up 17% on the last week. And when I was buying this one at $1,100, people were saying, oh, Shopify will never go up. And then just a month later, 3 weeks later, we're already up 35%. So give me a break, guys. Shopify is one of the best stocks to be talking about if you're a long-term subscriber. You remember me talking about Shopify and going into my bullish thesis, how they're like the everyday person Amazon. If you want to sell dog toys or fidget spinners, whatever it is, this gives you the ability to sell to the masses. And, I also did that video with Shopify. Wix was another one because you can link your Wix website to your Shopify, and they're the leading in self-made website platform. And then Square was the third one we talked about, to kind of the trifecta. Square allows you to process the payments on the website, and Shopify allows you to sell it to the consumer. So the trifecta: Shopify, Square, and Wix. All right, so the first call option we're going to be talking about is going to be on JMIA. They're up 6% on the day, but only 1% on the week, but they are up 17% on the month. So ideally, if you wait for them to get the support right around $27, would be better to take this call option out at that point in time. You'll have a little bit more leverage. Now you'd press trade option. You go over to September 17th is the date that I like. And I would be personally looking at this $33 call, $32 call, or $31 call. Now, this is only $448 if you decide to do the call here. And I would probably put my stop price right at around $250, right? So you're only really risking $200. And if you want to become better at option trading, by the way, and don't know how to do stop losses or how to pick expiration dates and call options, go ahead and reach out to me on Instagram because I have $100 off my option course. It's 18 videos long, and every single video is about option trading, and I go into detail how to become successful in option trading. So if you're a beginner at option trading or don't really know what you're doing and kind of guessing, that program is made for you so you can actually have some more experience. So again, we have JMIA, September 17th, and this is going to be between 33 call and 31 call. Now, on the risk factor, I would say that the risk isn't too risky because you're really only risking like $200, and you have September 17th for it to only go up 20% or so, right? Risk factor is a little bit higher because it is up 6% on the day. But if it was closer to $28 or $27 a share, this would be a lot better call option. All right, so the next one we're going to be talking about is Walmart, okay? And they're down 1.6% on the week, 1.5% on the month, but they're up 5% on the last 3 months, okay? Now, this one, again, would be better to buy closer to the 125 or 130 price point on Walmart. So if it gets to 130 or even like 132, this option would be a lot more attractive. So kind of keep that in mind. I like to kind of give you guys those precursors so you guys have some goals in mind. Okay, so we would press trade options, and we would actually go over to July 30th or August 20th. July 30th is going to be better if you have less money. Now, keep in mind, if you're going to be doing like one of these options, I like the 138 or 139. But the thing I want you to keep in mind is if you're going to be doing like 5 or 10 or even like three of these options and your budget's a little bit higher, make sure you extend your date a little bit more, or you go to one of the more expensive options like the $900 one, because it's better just to get one contract. Typically those options play a little bit better than the cheaper ones, but a lot of people only have $300 or less to spend on options. So that's why we're going to be talking about the July one, and we're going to be talking about the 138 call. I think that this is a great one. It's only $287, and I would put my stop loss right at around $150. So in reality, you're only risking about $100. And in reality, we have over a month time for Walmart to go up only 2%. So it's less risky. I would say that this is one of the more safer ones, the 138 call on Walmart July 30th. It's only $287. You only have to go up 2%, and you can put your stop loss right around $150. So you're only risking about $130 on this call. Okay, so next up we have Gnog down 1.5%, down 5.8% on the week, but they're up 15% on the month. So if you can get this one closer to 10 or 11 or even $12 a share, it's going to be a lot better for this option. What we're going to do is click on November 19th, so it's a little bit longer of an option, right? This one's only $185. It's one of the cheaper options on this video. Anyone can afford it, and it's still a pretty good option. And it really needs Gnog to go up to like $15 or $16 a share, but it gives you a lot of time. It gives you like 3 months. And I would be looking to sell this one 1 to 2 months in. I think Gnog has the ability to fly up 15 or 20 or 30% in the next 2 to 3 months. So it's definitely a little bit more of a risky option. This one's definitely going to be one of the riskier ones on the list, but it's one of the cheaper options also at only $185 for this $15 call on November 19th. It gives you ample time, and I would probably put my stop loss right around $75 or $85, so I know at least I'm getting some of my money back. I really don't like to lose anything more than 50% on my options. Now, another option would actually be going a month earlier. So here we have August 20th pulled up, and I think I might like this one a little bit more. It's around the same price, $178 for this 12.5 call, and we only need Gnog to go up to $14 or 9% gain. So it's less pressure on his shoulders, but it has more time decay and it has an earlier expiration date. So definitely keep that in mind. But I think both of those options can definitely be beneficial for the long run. Okay, now the fourth option we're going to be talking about is DraftKings, and they're up 1.7% on the day. They're down 7% on the week and up 13% on the month, but they are down 28% on the last 3 months. So they can be a good time to actually buy a call option on something like DraftKings. So I would be pulling up the August 20th, and we'd be looking at the $50 call. This one is $483. You only need a 10% gain in the next few months, which I think is very realistic for DraftKings to happen. We'll be putting a stop loss right around $250 on that one, the $50 August 20th call. Now, if you have a little bit more capital, I would be looking at the $50 call for October 15th is a little bit better. Or even if you have even more capital than that, look at the November 15th, and something like the $40 or $45 call would be a lot better if you do have the, instead of doing like 2 August 20th $50 calls, if you have the capital, just do one November 19th $45 call is better. So if you have the capital, that call is a lot better in my opinion. There is obviously some risk on a DraftKings going back down to like $44 a share in the short term. So if you don't like risk and you want to wait a little bit till DraftKings gets to $44 or $45 a share, might be a little bit more safer. But the thing is, they might never get that low. So you really have to weigh the risk versus reward on that one. Now, the last one on the list is going to be TDOC, TeleDoc, and they're up 3.7% on the day, up 13% on the month. This is one that we've already made some money on a call option. I would be looking at the October 15th because they're a little bit more long-term, and you definitely want to have a little bit more money for this option. So this one's going to be a little bit more expensive, obviously, but if you have a more capital, this one is for you. 165 call, 160 call, or 155 call. Those are all great for TDOC. I can see them making some money, and they're up 23% on the day, too. So they're up fairly good, a pretty penny on the day. October 15th is the expiration date that we have here. This is one that we actually took out on the close friends list a few days ago, and we've actually made some money from it already. I also think there is more time for it to produce more money, so you can keep holding it, or if you're not in it yet, you can jump in it. I think TeleDoc can definitely go back up to like 180 or 175. I think that this one is a little less risky because it is at a 52-week low currently, so I don't think it will go much lower. I think it is on the way up, and I would probably set a stop loss, by the way, around 30 to 35 to 40% on that TeleDoc position. All right, guys, so that was the video. I hope you did appreciate it. Share it with a friend if you know that they're an option trader. Again, if you want to get to the next level, I have one-on-one training programs that can help you get your account looking like mine. And I also have a video program for option trading specifically. So if you just want the option trading video program, let me know. I'll be able to send that to you. I also have a coupon off for the option trading program. All right, guys, make sure you're subscribed on YouTube, and see you in the next video. Remember, don't time the market, buy the market. Peace.